What's up everyone and welcome to another video about GME and the short squeeze. Today we're going to look at something that has been super highly requested. In this video I'm going to give an answer to the most frequently asked question about GME, and that question is, when is the short squeeze going to happen? We know that a high short interest means a chance of a short squeeze if the share price goes high enough. In a previous video I talked about the Congressional hearing possibly giving new life to the GME short squeeze, and in that video I set a price target of hitting $200 before the end of February, and that is exactly what happened. The Congressional hearing together with Wednesday's gamma squeeze became a strong catalyst for GME to start to surge once again, but we peaked at $200, so in order to truly trigger the short squeeze, it seems like there needs to be an even stronger catalyst. And today we're going to look at a specific date where there might be a catalyst much stronger than anything we have previously seen in GME. This catalyst consists of 7 different things, all indicating a huge price increase on the exact same day. And in this video I will cover all 7 of these indications as well as when they take place. But first of all, I would like to just super quickly give credits to Reddit user Hey It's Pixel, who is the one who came up with this popular DD. The information in this video refers to his speculation and analysis, and I will leave the link to his post in the description. So keep in mind that this is not financial advice and you're responsible for fact checking this speculative theory, and you're responsible for any decisions that you might make based on this speculation. And with that being said, let's get right into the first reason why this catalyst has a strong potential of triggering the GME short squeeze once and for all. This first indicator is Big ML's artificial intelligence prediction based on the CSV file from MarketWatch. From the historical data, the AI predicts a chance for the GME share price to start to seriously take off around the same date where all of the other indicators show their bullish signals. The second indication of when the short squeeze will occur has to do with naked short selling. According to FINRA, there was a short volume of 33 million shares in one day, and according to the theory, these 33 million were naked short positions taken by hedge funds in order to slow down the momentum and in order to prevent the gamma squeeze from continuing. The evidence supporting this theory is that the day there was a short volume of 33 million, the statistics had also shown that there were 0 shares available to borrow for that day. So according to the theory, the conclusion is that the 33 million shorts must have been sold nakedly. However, this is still just a theory and there could be possible explanations other than naked short selling. You will have to decide yourself what you believe is true. But if it is in fact true that they did nakedly short sell GME, that would mean that these naked short positions need to be covered very soon. Market makers such as Citadel have 21 days to cover a naked short position, and 21 days from the day they allegedly shorted 33 million shares nakedly would bring us to them being forced to buy and cover 33 million GME shares by the exact same day where all of the other indications are due. The third part of the catalyst is a consequence of hedge funds moving their short positions from GME to ETFs instead. The ETF that hedge funds shorted the most is XRT, and XRT releases their dividends every 3 months. When the dividend is received by XRT holders, it means that XRT short sellers are instead paying dividends to XRT holders. But when the dividend is paid by the short seller, the tax on the dividend that the holder receives is much higher than normal, and obviously the XRT ETF does not want to force their shareholders to pay huge taxes. So in order to satisfy their investors, it is likely they will force short sellers to cover before dividends are paid. And the dividend is scheduled to be paid, once again, on the exact day of the catalyst, forcing hedge funds to buy an enormous amount of XRT shares. And since a large proportion of XRT consists of GME, this helps push the price of GME up. The fourth indication that this catalyst has huge potential is that on the day of the catalyst, there's an unusual amount of options expiring. There are nearly 20,000 GME call options with a strike price of $800 expiring on this day. If exercised, that would suddenly create a demand of another 2 million shares. Not only does this show that there's a strong belief of GME hitting $800, it also shows that if GME does surpass $800 by this date, there's most likely going to be an enormous gamma squeeze, sending the price even higher. If hedge funds have not yet been forced to cover before $800, my personal belief is that the short squeeze will have to trigger with the gamma squeeze and the extreme momentum that will likely take place after the $800 mark. But apart from the unusual options activity in GME, other stocks that have nothing to do with GME are also affected. There's an enormous amount of put options in many big stocks on the day of the catalyst. Apple, Facebook, Coca-Cola and Starbucks are only a few examples. This could be an incredible coincidence, or it could mean that hedge funds are preparing to sell off other stocks in order to cover their short positions in GME. And if all hedge funds simultaneously sell off large amount of their stocks, those stocks will of course drop in price. And therefore, one possible conclusion is that institutions are preparing for the GME short squeeze to cause a crash or at least a dip in the entire stock market on the day of our catalyst. The fifth part of the catalyst is GameStop's Q4 earnings. Now the Q4 isn't released until 4 business days after the day of our catalyst, but in my opinion this is a very good thing. The Q4 is something that a lot of people have looked forward to and a lot of people are expecting good news. This way, the Q4 earnings report becomes just another reason to buy GME, and it contributes to the hype around the date of the catalyst, no matter what the report actually says. People might buy before the report is released to not miss out if there's good news, while at the same time, if the results are disappointing, this won't hinder the catalyst since the release is 4 business days later. The sixth reason this catalyst could be extremely strong, once again, has to do with options. And to understand this, we need to think back to what was happening in GME before all of the hype. Just a couple of months ago, GME was in a situation where it had crashed around 96% from its all-time high. With games being sold online and with the negative effects of the pandemic, the GME share price at one point was under $3, and during this time hedge funds were sure that the company was going bankrupt very soon, and as we all know, they took huge short positions. But apart from short selling, another way to profit off of a company going bankrupt is to write and sell call options for the stock. And if you're sure the share price can't go up again, selling call options is a safe bet. So the theory is that a lot of hedge funds sold call options for GME nakedly, meaning they didn't own the GME shares for which they sold call options. Market makers are usually careful and control the risk of selling call options by owning some of the underlying asset if the call option is exercised. That way they can avoid being forced to buy a lot of shares at a very high price. But according to the theory, hedge funds ignore the risks, and this means that future gamma squeezes could be much stronger than what we think due to hedge funds being forced to buy back more shares than normally expected when call options expire in the money. The seventh and last reason supporting the catalyst is the second congressional hearing taking place, and this will happen just 2 days before the big catalyst. The first hearing gave GME large publicity once again, and just a few days later we saw the large surge to $200. Hopefully the second hearing will bring the same huge attention to GME and once again bring a large price increase shortly after. And all of these things together, according to the DD and according to my own opinion, might actually be a catalyst strong enough to finally trigger the short squeeze. And before I tell you what date this catalyst is due, I would like to just super quickly ask you if you would like to please click the like button down below. These videos take a lot of work, so if you enjoyed this video or if you found it informative, leaving a like would be greatly appreciated. Thank you. And with that being said, the date of what could be the greatest catalyst so far is March the 19th. But before you click away from this video, I have one more super important thing to say, which is that despite this catalyst, March 19th is not a make it or break it point. If I was forced to guess when the short squeeze would occur, my best guess would be around March 19th. But the thing is, we don't have to guess. March 19th is a very exciting day and I'm looking forward to it. But it's important to remember that even if the short squeeze does not occur on March 19th, that doesn't actually change anything. The original thesis of the whole short squeeze still remains. If holders hold, short positions eventually need to be covered, and no one knows for sure if the short squeeze will trigger on March 19th or near that date or tomorrow or further in the future or even ever. The only thing that is for sure is that a lot of people, including myself, like the stock. And that is all for today's video. I hope you enjoyed and found this information useful. If you believe in the short squeeze, let us know by leaving a comment down below. You can also leave a comment if you have any questions regarding the short squeeze. And of course, if you would like to continue to receive updates, feel free to subscribe as well. And to end the video, I would like to once again thank Hey It's Pixel for making some great analysis of GME, and I would also like to remind you that this information is built on speculation and you need to make your own analysis. You're responsible for deciding if you believe in the theory or not, as well as for all of the decisions that you might make based on anything you see, hear or read. Thanks a lot for watching and see you next time.